Right, task 2. This task is a profit on disposal task with a part exchange. So let's look at this, right? So what I'm just going to do is just go through the theory, and then we're going to come back and fill in the gaps. Right, so let me snippet this out and just take this out so that I can work with this document as it is. Just do that. Right, so what do we have here? Let me draw some T accounts. I'm sorry, let me draw some T accounts so we can start with this to guide us. So it says that working on the accounting records of a business with the year end 31st of March, X7. It says we can ignore VAT, and it says an item of equipment was part exchanged for a newer model on the 31st of July 2006. Okay, so the original equipment was bought on the 11th of June, so we have 4,500 in here, and the original thing was bought on the 11th of June. So that's the 11th of June X4 to the 31st of March X5. That's the first year, and it tells us that we have a full year of depreciation in the year of acquisition, and none in the final year, and we are doing a 3-year straight line depreciation. So this is a nice one. This is like 4,500 divided by 3, isn't it? 1,500. So in year 1, when we depreciation, 1,500, year 1, accumulated depreciation, I mean, here's the asset, of course. Accumulated depreciation, 1,500. I mean, of course, this gets transferred to the income statement. That's the double entry to take this out of this journal, or out of this T account to the income statement. The income statement, remember, is just one long T account as well. So that's what happens eventually. In case you're ever wondering, why does this always go to 0? The whole point of this is to pair I minus E, isn't it, in the accounting equation? So we're ultimately trying to get to profit, so almost like a profit T account, right? So this is the thing that stays, because this account, I know I said it in the last question, is connected to this account. That's the first year. So let's see what happens in the next year. So we have 1st of April, X5, to the 31st of March, X6. So we have another for year 2, 1,500, and we have 1,500 as well, right? So we sell this thing on the 31st of July. So as at, if you like, the 1st of April, X6, this is our accumulated depreciation. So that's where we are as at that time. Right. So it tells us that there is no depreciation in the year of disposal. So we are not depreciating anymore because we dispose it during the year. We dispose it during this year ending 31st of March, X7, right? That's when we dispose it. So so really that's where we are. Right, so let me just change my pen color and move for the disposal. What you should create then is a disposal account to then journal this out of the accounts, right? So credit the asset account, debit the disposal account, credit the accumulated depreciation account, debit the disposal account. So technically, you know this asset is technically worth 1,500, yes? 1,500. That's what's happening. I mean, of course, this was transferred the previous year, the 1,500. This is now closed. This account is technically closed. This account doesn't exist anymore. This is where we are. Right. So I think this question was calculate the accumulated depreciation. This would have been 3,000 because we just wanted to know what the accumulated depreciation was at the end of the year. Now the question says that you exchange, you pay for a next asset. We'll come to see how much that asset is. Or actually, it's here. Actually, you pay for a new asset. Here we are. Here is a new asset with your old asset, and you receive 850 for that asset. So if you like 850, we pay. Think of this almost like a bank account. It's the same thing. So credit this And this goes towards the valuation of the new asset that we're buying. And then it says we pay the balance from the bank. So I'm just going to create a bank account here. Bank 5180 and 5180. So what must the case must be that the asset is worth this whole thing. So we give them cash, but we also give them our car as well. But our car is actually worth 1,500, but we've given them our car at 850, which means there is a loss on our car because we haven't given it to them at the value that we believe it to be, which would be the difference, wouldn't it, of 650. So that must go into a loss account, loss on disposal of 650. So this closes, of course, because we're not going forward with it. We no longer have the car with us, and this is an expense in your income statement. So the value of your new car, of your new, not new car, of your new machine must be, if you like, 850 plus 5,180. Yes, that must be the situation there. Right, good. So let's go back. I think with this information, we can go back and play around with this a little. So I can come in here. I can write 3,000 here. In terms of my disposal, look, I have here I have my disposals. I'm going to use disposals. Yes, I will have here 4,500 here. I suppose I'm just going to use depreciation charges. It doesn't really matter. Maybe it does actually, but I'm not too. I don't know how I would have called it. I would have called this person. I think they don't give the best. I would have called this accumulated depreciation personally, but that's the best we can get. Then of course, oops, sorry. Oh, I'm going to come here. Oops, this depreciation charges. Then we of course had the part disposal. Oh, sorry. Oh, you can drag down. Of course you can. Here we are. So sorry, actually this one. Sorry, I was looking for that. Let me. Okay, I know what to do. Let me have here the. I can't find what I'm looking for. So, well, there is the part exchange. I'm sorry. I'm looking for the bank, of course. Actually, I'm looking for the part exchange first. Okay, I can't find that. I know what to do. I'm going to come here and go. Let me go here, disposals. I'm going to change this first of all to equipment accumulated because that. Oops, sorry. I'm going to come here and put equipment accumulated depreciation because that's what that is. And I'm going to now come here and I can put in here equipment at cost. So that's equipment at cost. That's equipment accumulated depreciation. Then I part exchange, you see, which is what I find quite interesting. I can't find anything directly for it. So I'm going to yes, I think I mean I need to write in here 850. So I'll put disposals there. I'll check the answers later to see what they've put as the best title for that, but I wouldn't give myself too much of a headache there. And then finally, of course, there is the loss on disposal. Do I have a loss on? Yeah, the profit and loss account, I suppose. Yeah, and then you're going to have here 650. So that you should have your balance. Okay, great. So that's that bit there. Now, the question then goes on to say that, yes, here we are. Calculate the purchase cost of the new equipment. Right, before the part exchange, the balance was on the equipment account was 19,380. So let's come back here. Right, so we have here. Let me just get some space. 19,380 tells me 19,000. 19,380, 19,380, 19,380. Let's just clean this up. 19,380. So I'm just saying that so I remember. 19,380. Okay, right, 19,000. So what happened was we had all our assets, 19,380. So what would have happened was in here you have this 4,500. So technically, really, I would then, of course, this is the cost account of assets, isn't it? The full cost account. I would take out the 4,500 into the disposal. So the real double entry was credit the asset account and then debit the disposal account, right? This is the real double entry. I didn't know that new information when I was doing this. Then, of course, what's happened here is you now have acquired, if you like, this new asset here, haven't you? So what I'm really trying to do is add these together. This plus this is plus this. So I'm basically, let's change my pen color, asking what is the carry down value? What is the carry down figure of my new asset account? And let's just do that very quickly. So that's 19,380 plus 850 plus 5,180 minus 4,500. That takes us to 20,910. So that's how you get your closing figure of your assets. 20,910. Yes, so let's just put that in the box there. 20,910. Right. And it then says that complete the sentence. So the equipment at cost will now have a final balance of. Oh, that's what this is. Sorry. Oh, sorry. Sorry. This is 20,910. This here was what we calculated earlier on, which was the 850 plus 5,180. Yes, the 850 plus 5,180. So 850 plus 5,180. 850 plus 5,180. 6030. 6030. And then over here it says that we have another question. On the 30th of March, you buy some new fixtures and fittings. They were funded by a loan, no problem. You bought them for 3,248, so as you wish. Depreciation charges were 406, no problem. They want us to do the journaling. This is the narrative. Depreciation charges for fixture and fitting. So this is a straightforward depreciation charge. Depreciation charges, that's a debit. 406, pretty straight. It's a debit. And then, of course, accumulated depreciation, which I suspect is what they're testing here. Fixtures and fittings, just to be sure there's nothing else lurking there. It's fixtures and fittings, so it's fixtures and fittings accumulated depreciation, isn't it? 406 as well. And then that's a credit. Yeah, awesome. And that is the end of task 2.